well. But also, I would just point out is that one of the biggest drivers about a year ago of inflation was the stock market. And the stock market was at all-time highs. We had the big correction in March into April. We're now back at all-time highs. So the wealth effect, people are feeling that again. They're feeling well. They look at their 401ks up 25% since April. That's a huge move. That makes people want to go out and spend on goods, for instance, new TVs, etc. And so I think that that can also play a role here. So I think a combination of all those things that I mentioned, you will see inflation continue to hold up. Again, I don't expect a massive spike unless new high tariffs of 30% go into play. But is it going to stay stubbornly around 3% inflation? I actually do think so. And that makes it very tough for the Federal Reserve to cut rates substantially. I think a mercy cut, absolutely. They'll do it by the end of the year, at least one, but we don't just want one, right? The markets are craving, 100 basis points. Heck, Trump wants 300 basis points. We're not going to be able to do that because it would then kickstart overall.
So the 10-year yield then going up. Another interesting factor is the fact that the 2-year may go down if the Fed cuts rates. So then what we're looking at is a steepening of the yield curve if the longer end of the curve continues to go up. As a trader, when you look at the yield curve steepening, what do you do?
Yeah, as a trader, I start to get a little concerned, right? Because there's a divergence in essentially what is paid out on the U.S. debt. So 10, 20, 30 years, the bond yields are starting to go higher. The twos, lower, are going to go lower with the Fed. And remember, people, the Fed controls the short end. They don't control the long end. Who controls the long end? The market. So what I see is if the long end starts to go up further, let's say we get to 5% on the 10-year, that tells me that in parties like governments around the world that are used to buying the U.S. debt, they're demanding a higher interest rate. They don't believe in the financial structure of the U.S. like they did. The dominance of the U.S. dollar is at risk. De-dollarization is slowly, and I stress this because everyone freaks out that de-dollarization is something that's going to happen overnight. No, it's 10 or 20 years. But again, starting that process, it is starting, it looks like to me, as again, the foundational trust in the U.S. system with the U.S. debt is starting to erode. Indicator. And sure enough, today, notice Bitcoin actually having a substantial fall. So that's the first thing that just has me as a technical trader on alert here that we did get a daily topping tail. The number two thing is we have to go to our weekly chart and start looking at a longer term trend line that I've been following. In fact, I think the last time we talked, this was a trend line that I was looking at. And basically what we do here is we connect all of our highs from the 2017 bull market, first high of 2021, second high of 2021, and then the 2024 highs into early 2025. Now, we breached that line, but as of now, it looks like we're trying to get back below it. You do not want to see Bitcoin have a weekly close back below basically 116,000. That would be a failed breakout, and sometimes the biggest moves come from failed breakouts or breakdowns. In this case, that would be a big move to the downside. So I love the bullishness out there, but also it can be a warning signal when you get the cacophony of insanity where people are calling for 250,000 by year end or even a million. Be aware. I always just look at the charts. The charts give me probability. And right now, you've now turned from a bullish move on Bitcoin to now favoring bearish side action.
Okay, Gareth, look at what happened today and say, hey, well, yesterday was the real kind of trend. Today was just a knee-jerk reaction to some CPI data. Basically, people were just selling the news. I really need to buy today's 4% dip. Because I believe in the medium-term trend above 120,000. So what would you say to that?
Yeah, I think, again, it depends on your philosophy. If you're a trader like me, then, you don't buy topping tails, right? Topping tails are something you would look to short into until it fails, which occurs on any daily close above the topping tail high, about 123,250. But if you're a longer term investor, I mean, if you're like me, I do believe eventually it goes to 250,000. And so, yeah, I mean, you could be buying on every pullback. Just my only recommendation is don't go all in on a pullback to 118,000. Leave a little bit of room to dollar cost average if it comes down another 510, another 510 after that, so that at least you can kind of work your average down if you get one of these bigger pullbacks in Bitcoin.
It's okay. So overall, then what do you do then? Do you reevaluate that trend line?
You do to some extent. So again, charts are fluid. So a level that you love today, you may not love in a month from now or
Hmm.
in even a week from now. One of the things to keep in mind is this type of pattern would be a bear flag, right? So if you pull back and you reverse this recent upside, that's a reversal. You've also closed back below that longer term trend line. Then going sideways creates a classic, what we call in technical analysis, a down move, sideways consolidation. This is what we know as a bear flag that probability wise signals downside. So you would actually say, okay, this is telling me it's going to go lower. You would still look for that level. Now, again, there's a caveat here, and we're getting into some chart analysis in terms of education, but this is great stuff. I think your viewers will really like it. Let's just say we come down and we get close to my buy, but we don't hit my buy. And that happens in real life, real trading. Sometimes it gets close and just doesn't fill you. And then we start consolidating. In this situation, I would not be a buyer because this is now making a bear flag just above my buy level. So again, you don't want to just say, oh, well, if it just downticks here, because a bear flag, when it plays out, it's usually a much bigger move. And so I'd 500% in a day, these penny stocks starting to get crazy. And then money says, okay, I've made money in these risky stocks. Where's the next place to rotate while risk on is in play? And recently, over the last week, that was altcoins. Altcoins began to rip up. We've seen XRP, like you said, go. We've seen Uniswap. We've seen SUI. Like all of these kind of higher risk plays are now running. And that's just the normal cycle that a market goes through with risk assets. So I think that's why you're seeing crypto run here. It's usually towards the end cycle. The reason I say it's the end cycle is that what's riskier than altcoins? What's riskier than Bonk or Doge or Fartcoin, right? I mean, these crazy meme coins that are going up 100%. What's riskier than that? And that if that's the end game, that's the last thing to run before the market's correct.
This kind of reminds me of gold in the mining stocks, but we'll talk about gold in just a bit. Gold's been running up all year, and the mining stocks have been beating gold. Silver has also been outperforming. Similar kind of pattern we're seeing with Bitcoin and the alts. The Bitcoin being the leader of the crypto space, moving up first, and then everything else moving up later. So it's just quite interesting. So you're looking at this as kind of a bear signal. Have the drivers?
Yeah, and we also saw that in previous cycles. This cycle, we just don't know because Bitcoin hasn't been around long enough with enough bull market tops to really be sure. But certainly historically, it has led and been a signal of a top.
Well, let's take the top from the last bull rally up until the collapse. Well, not collapse, the pullback in April. So as you can see, from that chart here. February was when it peaked, and then we had a major pullback, a bit of a consolidating pattern, and then that's when Liberation Day struck. And then on April 9th, that's when the tariffs were taken back, except China, and then we had a V-shaped recovery afterward. I wonder, and then now we're at new all-time highs, which is significant because it's the first time since the beginning of the year that the markets have reached a new all-time high this past week. So let's just compare this high to February's high. Any technical similarities? In other words, can we draw any conclusions as to whether or not we can see another pullback by the order of 20%?
Yes.
Bitcoin is, similar question for stocks as we asked for Bitcoin. What are the resistance levels that you're expecting for stocks such that if it breaches below that level or touches below that level, you're definitely shorting for good?
Yeah, so I'm already short on the market, but the big level here on the S&P is this trend line right here, which we're now touching today but have not broken. Again, a break below that would be, I think, where we start to see at least a 5 to 10% correction on the markets, which would honestly take us back to, let's see where that would go. What would a 10% from the highs take us back to here? Yeah, so somewhere right in this vicinity, you can see this high pivot here, this low, and then this gap fill. So somewhere on the S&P back to about 5,700, I would expect that to be kind of your run-of-the-mill retrace after such a mammoth move. And then if we look at the NASDAQ, we can take a look at the NASDAQ composite. If we look at this chart, by the way, just something to point out here. This is something I showed in our last interview. But again, notice the parallel and look at what we're hammering on the upside here. So here's your COVID low to the bear market low. And all I did here was use a simple tool called a parallel. It's one of the most powerful things in technical analysis, but something that everyone just since basically early June, we've gone from about $32 and change to 39, and all while gold, and I'll flip over to my gold chart here, gold has just been consolidating, right? So a lot of sideways consolidation. I still think there's risk on gold for a pullback to about 3,050 or 3,000, but this, again, this up move, this is your flagpole, your bull move. This inside parallel is a bullish pattern of consolidation. Even if it comes down here, I'd be buying gold on any pullbacks here for a longer move. And let's be fair, we all know what the government's doing. A new spending bill passed, going to add $3-4 trillion at minimum to the debt. We already are at 37 trillion. Just like Bitcoin longer term, I don't know how you don't like the idea of something other than fiat currencies as a store of value.
What about the mining stocks? So the GDX and GDXJ have grossly outperformed gold this year. This was the exact opposite last year when we were talking about this. And I know your stance on the S&P 500 overall, but if you're still slightly bullish on gold, are you then still slightly bullish on the mining stocks, even though many of them have already run up a lot, like by the order? Just give you two possibilities, and obviously nobody knows for sure. We can just evaluate the probabilities and see which one is more likely. So just on gold, which is more likely by the end of the year? 4,000 on gold, or a pullback to below 3,000?
I'm going to say 4,000. I do think we'll pull back close to 3,000, but if I have to say by year end, I think gold is closer to 4,000. I think instability. I think, again, eventually the economy will continue to weaken slowly, but it'll weaken. And I think that pushes more people into gold.
All right. Let's assume Bitcoin's at 120,000. Let's just round up to 120K today. So what's more likely by the end of the year? 150? So that's 30K on the upside, or 30K on the downside, which is 90.
90. I think 90. And I think that's solely on that. I love Bitcoin longer term and do think it's going to 150, but I do think also if we get in a heavy sell-off in the markets, which looks like we're close to, then I would be looking for risk off in Bitcoin near term and a pullback into the 90s, maybe even that 87, 80, 88 level we were just talking about on the chart. And then I would just, again, start to accumulate at that point.
All right, S&P's at 6,200 today. So 7,000 on the S&P by the end of the year, or let's say 58,000 or 5,800.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.